Welcome to our episode of Hong Kong Brief, where we breeze through the latest happenings with a touch of lightness, because who said news had to be all doom and gloom? First up, we're taking a trip around the globe with Hong Kong's very own Gaw Capital partners. They're spreading their wings and investing in some pretty exciting sectors, think logistics in Vietnam and Mexico, and artificial intelligence in the US. Why, you ask? Well, it seems they're looking to dance around some of the economic hurdles China's facing, with a little help from trade diversifications. Meanwhile, over in the Big Apple, a New York court has just given the green light for creditors to chase after a Chinese developer over some unpaid bond bills. And back in China, it's a mixed bag of economic indicators. While factories are buzzing, shoppers are holding onto their wallets a bit tighter. But it's not all about the economy. We've got some airtime for Cathay Pacific too. The airline's flying high with its first profit in 4 years, and it's all thanks to a little help from its friends, and by friends, we mean the Hong Kong government. Speaking of flying, Japanese retailers are landing in Hong Kong, drawn by lower rents and the city's love for all things Japanese. And for those looking to call Hong Kong home, there's a new cash for residency scheme that's catching the eye of investors, thanks to Janus Henderson Investors. Lastly, we're tapping into the silver economy in China, where tutoring the elderly is becoming the new trend. And in the world of sports, the Hong Kong UCI Track Nations Cup didn't quite pull the crowds, but hey, the show went on. As for the stock market, it's waiting on tenterhooks for some central bank decisions. And wrapping up with a tech twist, China's betting big on high-tech and advanced sectors to rejuvenate its economy. So, there you have it, folks. A whirlwind tour of today's news, served up with a side of optimism. Stay tuned for the detailed scoop on all these stories and more. Please continue watching for more in-depth content. Gaw Capital bets on Vietnam, Mexico, and U.S. opportunities to offset China woes. South China Morning Post. Hong Kong's Gaw Capital Partners is investing in Vietnam and Mexico's logistics sectors and the U.S. artificial intelligence (AI) sector to counteract challenges to China's economic recovery. The trade tensions between the U.S. and China may continue for several years, said Goodwin Gaw, the firm's founder. He added that he wanted to invest in countries that benefited from China's manufacturers diversifying away from the mainland, which included Vietnam, India, and Mexico. New York ruling on Chinese developer bonds clarifies creditor standing. Bloomberg. Creditors of Glory Health Industry Limited, a Chinese property developer, have been given permission by a New York state court to sue the company for missing payments on its $335 million bond. The court ruled that investors, who hold 42% via prime brokers, have standing to sue as they received approval from the note's clearing agent. This ruling could make it easier for creditors to sue financially struggling bond issuers in New York, while also offering a glimpse into Chinese developers' legal options in fending off creditors of their dollar-denominated bonds. China's growth mixed as output jumps, consumption lags. Bloomberg. China's industrial output rose by 7% in the first 2 months of 2023, beating economist estimates, according to data from the National Bureau of Statistics. Retail sales were up 5.5%, in line with projections, while fixed asset investment growth accelerated to 4.2%, also stronger than expected. However, investment in property development fell 9%, and consumer and business confidence remain weighed down by an uncertain income outlook. The urban jobless rate rose to 5.3% from 5.1% at the end of 2022. Cathay Pacific needs Hong Kongers' support as it finds its feet again. South China Morning Post. Cathay Pacific has reported its highest profit since 2010, marking its first profit in 4 years. The airline recovered from a net loss of 6.5 billion Hong Kong dollars, $831 million, in 2022 to a net profit of 9.79 billion Hong Kong dollars in 2023. Cathay Pacific received government support in the form of a 27.3 billion Hong Kong dollars lifeline during the pandemic and has repurchased half of the preference shares issued to the government. The airline is an integral part of establishing Hong Kong as an international aviation hub and is seen as a leading presence in the region. Japanese firms make the most of Hong Kong's low rents, snap up retail spaces. South China Morning Post. Japanese brands and retailers are increasingly occupying retail space in Hong Kong due to more reasonable rents and Hong Kongers' affinity for Japanese products. Over the past 2 years, Japanese businesses have been the most active among foreign firms in terms of leasing retail spaces. Hong Kong people have a strong preference for Japanese brands and Japanese food, and the lower rents make it an attractive market for Japanese retailers. Despite the challenges faced by the retail property segment in Hong Kong, more Japanese brands are expected to enter the market. Janus Henderson targets Greater Bay Area, Hong Kong cash for residency scheme. South China Morning Post. Asset manager Janus Henderson investors plans to tap opportunities in the Greater Bay Area, mainland China, and the wider region, with a particular focus on leveraging Hong Kong's newly launched investment migration scheme. CEO Ali Dibadj says the company aims to boost assets under management in Asia from $30 billion in 2018 to $50 billion in the next 5 years. Janus Henderson's Hong Kong summit last week sought to promote stock and bond investments, with the CEO saying investors are currently sitting on cash, missing out on the massive upside potential in the U.S. stock market. Silver lining: tutoring the elderly is growing fast in China. Japan Times. China's aging population is creating a growing market for recreational classes and activities for the elderly middle class. Companies are offering a range of activities, from yoga to African drumming and smartphone photography, to cater to this market. This industry is thriving in contrast to the declining after-school private tutoring sector, which has been affected by government regulations aimed at lowering education costs and increasing birth rates. This shift towards the silver economy presents significant growth potential for businesses in the elderly learning sector. Nations Cup organizers relaxed over small crowds, no government targets. South China Morning Post. The organizers of the Hong Kong UCI Track Nations Cup were not given any attendance or revenue targets by the government after the event was awarded M-Mark status. Attendance was poor across all 3 days of the event, with even the night sessions, featuring the best riders racing for medals, failing to fill more than 50% of the available seats. Simon Leung Chihua, chairman of the Nations Cup Hong Kong Organizing Committee, said low spectator numbers were anticipated, but also acknowledged that ticket sales suffered due to a delay in promoting the event. Asia stocks look muted ahead of central bank week, markets wrap. Bloomberg. Asian stocks are set to make a mixed start to the week, with Australian equity futures pointing towards a slight loss while Japanese and Hong Kong contracts showed small gains. The Bank of Japan and the Federal Reserve will be making policy decisions this week that could shape the near-term direction of global markets. The Bank of Japan may lift its key interest rate to 0% to 0.1% on Tuesday, its first hike in 17 years. Meanwhile, the Federal Reserve's policy meeting on Wednesday may dictate the direction of global stocks for the next quarter. China's focus on high-tech, advanced sectors could hold key to revival. South China Morning Post. China's economic recovery and growth are facing significant challenges, including weak consumption, lack of investment confidence, declining foreign direct investment, overcapacity, a sluggish housing market, mounting debt, deflation, a demographic crisis, decoupling from the U.S., and deglobalization. To address these challenges and find a new driver for economic growth, China's leadership is prioritizing the development of high-tech sectors and striving for self-reliance in science and technology. The focus on innovation-driven development offers hope for sustainable development and avoiding the middle-income trap. However, there are doubts about the likelihood of a quick recovery, particularly in the face of competition with the U.S. China is seen as a strong rival in artificial intelligence, but concerns are growing about the widening gap between Chinese and American competitors. Battery-powered vehicles have been hailed as China's new hope for driving exports and fueling the economy, but the country faces significant challenges in the semiconductor sector due to U.S. tech restrictions. Overall, a technological breakthrough in advanced sectors could be the decisive driver in transforming China's future. Muted start, the Bloomberg Open, Asia edition. Bloomberg. China's economic activity in January and February was likely mixed, with property investment expected to decline again. This could hinder Beijing's efforts to maintain GDP growth at 5% this year. Top officials have pledged increased fiscal spending and support for the electric vehicle (EV) industry. Vladimir Putin has won his fifth term as Russia's president, giving him the ability to escalate the war in Ukraine and challenge the West. Donald Trump has threatened to impose a 100% tariff on cars made in Mexico by Chinese firms. India will hold a general election starting April 19, with Prime Minister Narendra Modi's BJP seeking a third term. China's Gen Z is investing in gold as a safe investment amid economic uncertainty. Performance of Hong Kong's 1823 hotline not so hot. SCMP opinion. Hong Kong's 1823 hotline, which handles inquiries and complaints across government departments, has been criticized for its inefficiency and lack of resolution. According to an investigation by the Ombudsman, only 1.4% of cases needed to be escalated to higher-ranking officers, while 7.5% remained unresolved for more than 6 months. Additionally, nearly 60% of cases took more than 30 days to handle. The hotline's 500 employees were only able to answer 42% of the calls received each year, leaving approximately 2.5 million unanswered. The government should review and streamline the hotline's processes to make it more effective. What drives James Mackenzie, cancer survivor? The Sydney Morning Herald. James Mackenzie, chair of law firm Slater and Gordon, has reflected on his personal experience of having cancer and a renewed perspective on life. Mackenzie, who was diagnosed with bowel cancer 13 years ago and prostate cancer in 2020, spoke of how his health challenges and the deaths of his parents have made him more conscious of his own mortality and influenced his decisions. He also discussed the company's delisting from the Australian Securities Exchange, ASX, in 2021, citing poor governance and bad strategic decisions as contributing factors to the firm's previous issues. Mackenzie stated that law firms should not be listed or engage in international acquisitions unless it is clear how these fit strategically and the firm has the capability to run the acquired business. He also noted that his political affiliation with the Australian Labor Party is aligned with the party's policies and values. The Malaise of Macau and the battle for survival in the City of Dreams. The Sydney Morning Herald. Macau's unique cultural identity is under threat as the city faces increasing pressure from mainland China. Macau, known as the Las Vegas of Asia, has experienced rapid economic growth due to its thriving casino industry. However, beneath the glitz and glamour, the centuries-old Macanese culture is struggling to survive. The Macanese, a fusion of Portuguese and Chinese families, have created a distinct culture that blends elements from both cultures, including language and cuisine. However, the Macanese Creole language, Patois, is considered critically endangered, with only a handful of native speakers remaining. Additionally, the influence of mainland China is becoming more apparent in Macau, with Mandarin increasingly dominant and changes to school curriculums and public notices. Some residents fear that Macau's identity will be lost as it becomes integrated into China's Greater Bay Area project. However, others believe that Macau must adapt and reinvent itself in order to survive. The future of Macau's cultural heritage hangs in the balance as the city navigates its relationship with mainland China. Abu Dhabi speeds up country club admissions to lure hedge funds. Bloomberg. Officials in Abu Dhabi are working to attract hedge fund managers to the city as part of an effort to position it as a leading global financial center. Abu Dhabi offers a tax-free status, a favorable time zone for trading, and a $1.5 trillion sovereign wealth fund. Now, it is seeking to offer further incentives to traders and their families, such as assistance with school admissions and access to country clubs. The city hopes that such perks will help it compete with other leading financial centers such as New York and London. The strategy appears to be paying off, with firms such as Bervan Howard Asset Management now managing more money in Abu Dhabi than anywhere else. Goldman Sachs, Morgan Stanley, and Rothschild have all opened offices in the city. In contrast, Dubai's success has led to overcrowding and long waiting times for schools and restaurants. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.